channel. I'm Doris and I'm here to share with you about the updates in my stock account. Today my stock account has made a total loss of $1,586. US stocks were mixed in the late trading. In my account today, the total PL is negative 2.31%. So right now the net asset of my account is $66,968.89. Today, SKQ decreased for 2.27% to 33.5758, and DRV decreased for 0.2% to 41.25. In the market showed a mixed close. Dow Jones Industrial Average rose for 0.11%. Nasdaq Composite rose for 0.92%. And S&P 500 all rose for 0.28%. All three U.S. major indexes showed a gain on Wednesday. Today, the software industry rose for 2.34%. Entertainment rose for 2.06%. On the other hand, oil and gas E&P decreased the most with 2.84% of loss. U.S. stocks were mixed in late trading on Wednesday, with the Dow Jones down slightly. Investors are still assessing the inflation situation and its impact on Fed policy. Yesterday and today's CPI data and today's retail sales data show high inflationary pressures, reinforcing market expectations that the Fed will stick to its hawkish stance. Today's January CPI inflation data was higher than economists had expected, suggesting the Fed's path to fight rising prices could be expected. The Consumer Price Index rose 0.5% month-on-month and 6.4% year-on-year, with the average of economists surveyed by Dow Jones expected a 0.4% month-on-month rise and a 6.2% year-on-year rise. On Wednesday's economic data front, U.S. retail sales rose 3% in January from the previous month, the biggest increase since March 2021, expected 1.8%. Previously, 0.10% decrease. Excluding food and energy costs, core food and energy factors, core retail sales rose 2.23% in January month-on-month, compared with 0.8% expected and a negative 1.1% last month. U.S. retail sales in January were $696.982 billion, compared with $677.1 billion previously. U.S. core retail sales in January were $565.459 billion, compared with $552.7 billion previously. Analysts said U.S. retail sales rose by the biggest pace in nearly 2 years in January, a sign that consumer demand remains strong and could strengthen the Fed's determination to raise interest rates on continued inflation. All 13 retail categories saw growth last month, with cars, furniture, and diet rising more. The report shows that U.S. consumption has made a good start in 2023, rebounding from a slowdown in spending back at the end of the last year. The resilient U.S. labor market, historically low employment rates, and strong wage growth have allowed many Americans to continue to buy goods and services despite rising borrowing costs and high inflation. Retail sales rose sharply as job growth accelerated and inflation cooled slightly at the start of the year, hitting 3% month-on-month in January. Inflation, rising borrowing costs, and economic uncertainty led American households to reduce their spending at the end of last year. But analysts said the surprisingly strong U.S. non-farm payroll report and still strong wage growth signal a good outlook for consumer spending in the near term. Some analysts believe that economic growth could be accelerated. Naroff Economics LLC President Joel Naroff said, "Consumers are in pretty good shape. When people are happy with their work situation, it turns into consumer spending." 0, 2, and 10-year Treasury yields widened to 89.8 basis points after retail sales data. Erdenti Research President Ed Erdenti noted that while inflation is still above Fed's 2% target interest rates, the higher-than-expected figure is not entirely surprising. Inflation comes with expectations. I think that's why the market is easy. On the month-to-month rising inflation data, she added, I think we'll have to have some bumps in the road, but all in all, I think we're going to see strong deflation. But he added that despite predicting a soft landing, he did not expect the Fed to cut interest rates this year. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.